If you have been struggling with getting a trading strategy that works for you with futures prop firms, in this video, I will share with you the ORB strategy, or commonly known as the opening range breakout strategy. We'll talk about what it is, how to execute it, where to buy, where to sell, and the whole 9 yards. If you watched the recent 2 interviews I've done on my channel with Michael, who locked in $180,000 in 1 year with futures prop firm payouts, and also Sam Joe, who locked in $59,000 in 30 days with Take Profit Trader, they both talk about using this opening range breakout strategy for their trading arsenal. So what exactly is it? The opening range breakout strategy is when a trader would wait for the first 5 or 15 minutes of the trading day and they do not place a trade. Some people like to do it on a 5-minute chart like this. Some people like to do it on a 15-minute chart like this. The premise of the strategy is that for the first 15-minute candle, you would observe whether the next 2 to 3 candles break out of the range of the previous candle, and you would expect price to continue towards that direction once it's broken out of, whether it's breaking out to the long side or breaking down to the downside. This morning, for example, the first 15-minute candle printed red, the next 15-minute candle printed green. And since this previous candle broke above the previous candle, the opening range breakout strategy would be to buy it for continuation to the upside. Of course, today this worked. It's easy to look at a chart in hindsight and say, oh, that's really simple. Once it broke out, I'm gonna buy it here and sell it on the pop. But when you're trading real time, as you know, NQ many times like to do very nasty moves, up and down to fake the traders out before they enter in. So what is a good entry and exit point if you want to take the opening range breakout strategy? For me, when I'm trading a breakout strategy, I like to see that the previous candle hold at least 50% of that move. So let's say now it's at 10 o'clock and it's 10:01 and a new candle is printing. Now on the dip is where I want to buy because I like to buy dips and sell rips. If I expect this opening range to continue, I will buy this dip. However, I will make sure that this candle does not violate at least about 50% of this candle, which is approximately here if I eyeball it. If you want to make it more precise, you can pull out a Fibonacci retracement candle and go from here to here, and this would be the 50%. Once it cracks the 50% of the previous candle, I don't like that entry anymore. There's so many times if you're on a live stream, you hear me say, guys, they've broken down to 50% fib, and if they don't hold the 50% fib, the likelihood of them taking lower and even to the low of day is much higher. And so I use that guiding principle for the opening range breakout as well. What about a 5-minute chart? Because this one is a 15-minute chart. If you look at the 5-minute chart this morning, you will see that the opening range of the first candle did not get broken out of until after 10 o'clock right here on this candle. If you use the same idea of buying the opening break without violating the 50% of this candle, you buy this dip and you sell it on the pump. Now, I do realize that different traders would take this ORB strategy differently. Some people would not buy the dip for the push. Some people like to buy the breakout. Some people, in fact, would call the ORB strategy as a breakout strategy. They would set their buy stop right here, so when the price pushed up, they would be triggered into that long. I personally don't like to buy strength unless I see a possible momentum trade at 9:30 to about 11 o'clock in the first 1 hour to 1 hour and a half of the New York Open. Momentum trades are more likely to happen during that time, and I'm willing to buy for the breakout or for the breakdown. If today did not break out, the same thing would be true for the downside trade. Let's say we have the inverted scenario happen. This candle actually happened to be red and it broken below this low of the first 5-minute candle. Then your bias, if you're trading the ORB strategy, is that it will continue lower, and you can either do a sell stop to be triggered into a sell once it breaks this and trade to the downside. That's one way of trading the ORB strategy. Another way of the ORB strategy is some people wait for the retest. So they wait for the breakout here, which happened, and then they wait for the retest into that breakout level, as you can see here, to buy right here with a stop just a little under their entry. And then they ride the move up to the upside. Nothing wrong with the strategy. Depending on what kind of traders you are, you can do this as well. However, you do have to know when there's a lot of momentum, sometimes there is no retest. Today, there is a pullback for you to get long on this 5-minute pullback candle for a retest, but other times there are no retests. The market just goes straight up, and that's why sometimes you got to do the micro dip squeeze long, which I talk about in my course in module 4.1. Micro dip squeeze long, you buy the momentum and you ride it higher. Micro dip squeeze long can be used in conjunction with the ORB opening range breakout strategy or the opening range breakdown strategy. So what would invalidate this trade? Because not every time when it breaks out, it's going to continue towards that direction. Sometimes NQ like to sweep up and then reject. I like to call that the sweep and reject trade. Something that you have to see before it happens. With screen time, you kind of predict it's going to happen at certain key levels. If you're more of a swing trader and you hope for larger points like 50, 80, 100 points, then your stop loss could be a little bit bigger. It could be just a tad lower than the opening range low here. But I personally don't like to do that because if I'm going to buy here on the breakout and my stop is all the way down to the previous low of that candle, that's too big of a range for me. As I told you, I like to cut it when it's about 50% of that candle of that range. But mind you, that's because I trade minis and I don't like to trade micros. I only scalp for 10, 15, 20 points. And so if I get long here on this pump with a 30-point pump here, I'm already out. And on a retest, I'll be buying it again for another 10, 15 point push and I'll be out again. This is the way I like to trade. I don't like to hold for 80 to 100 points because I like to rotate my accounts, manage my risk. When I buy here and sell this pop, I can engage in a second account to buy the dip and sell the pop again. On this trend move up, anyone can look at it and say, well, why don't you just copy trade 5 to 10 accounts, ride the wave move up here and call it done? It sounds easy, doesn't it? Why don't you just buy it? You would have locked in this 100 points right up here, bro. Why don't you just copy trade, bro? Well, bro, because hindsight trading is always the easiest. You look in hindsight, you're like, man, this is so easy, bro. Just buy the dip and sell the rip. But if you look at later today, look at what the market has done. The market pushed into this high of 610, 620 into a box, which we draw every morning. Boxes are key levels of possible rejections and buy zones. Today, they got into both of our boxes. And since then, by the close, this chart dumped all the way back down. It's always easy to look in hindsight and say, bro, just buy it and hope for another 100 points when this could actually happen. Hindsight trading is the easiest, but live trading is something different. And live trading is what we do every day at 9:30. We buy dips, sell rips, lock 10, 15, 20 points. We don't become heroes. We rotate our accounts, manage our risk. And when you do that, you'll find that it's easier to lock in profits. And almost every day we go into our payout section like this and we see people locking in payouts like this here over and over and over again. Whether it's with Tradeify, Apex, Take Profit Trader, My Fund of Futures, Buonox. I love locking in payouts along with you guys like these, day in and day out, month after month. Remember, there's no income guarantee in trading. Trading is hard, you know that, but hopefully you can find the inspiration to know what is possible in trading. If you want to get a more detailed approach of how I enter and exit my trades, inside my course in Module 4, I have 10 videos showing you exactly how I enter and exit trades, how I buy dips and sell rips, and how I do this over and over again on the live stream using these strategies. Go to fspfutures.com and you'll see all the info there. If you want to trade live with us every day for free, make sure you subscribe to this channel and hit the bell so that you know when we go live and when we release new videos to help you in your trading. Make sure you hit the like button, drop a comment, and I'll see you on live.